Kurt Duffeck with the new real estate team in Austin, Texas at eXp Realty. And today I'm here with Alejandro Juarez with
AMEC Home Loans, guys.
All right. Hey, today's topic is about the top 3 things that you should definitely not do when looking to buy a home or considering a mortgage more specifically. Alejandro, what's number 1?
Well, number 1, I'm going to go a little bit off the cuff here. Well, not off the cuff, but off the beaten track. We all know some of the things that obviously are not good for our credit. But one of the ones I want to talk to you guys about is more specific to credit and mortgage, right? When you're trying to purchase a home, one of the first things that comes to mind is cosigning. So cosigning is really important because of the way that it impacts the way we look at your debt. The moment that you decide to cosign for someone else, whether it be a brother that wants you to go in on a rooms to go purchase, or a son or daughter that wants you to purchase a car for them, whatever that debt is, that debt becomes your debt, even if they're paying that debt. Now, if you want to take that off of our calculation, we have to show 12 consecutive months worth of payments coming directly from that other person, from their bank account, or being able to be verified. If we can't do that, then that debt is as good as yours. So if you're going out there and co-signing a car and that car is $400, then you can expect that $400 to count against you for the rest of this year until we can show 12 months of consecutive payments. So give a second thought to co-signing. If you're thinking about buying within the next year, really make sure that you evaluate how that's going to impact you before you do.
That's important. I've seen several deals go that direction.
Oh, absolutely. Sometimes it's not even co-signing, it's the borrower themselves. They go out and buy a car in the middle of purchasing a home and it changes the calculation. So make sure you think about co-signing.
All right. Number 2.
Number 2 are inquiries. The amount of time that you're pulling credit it can impact your overall credit score. You don't want to be pulling your credit over and over and over again, and specifically too far apart. If you're thinking about shopping your lender and you're thinking about how do I get the best deal possible, I want to go and look at 3 or 4 different people, well then make sure that you plan for that and make sure that you have set aside a specific time frame to say, okay, inside of these 5 days, inside of these 7 days, I'm going to pull my credit 3 or 4 times with these 3 or 4 different lenders. And then we can, or the credit bureaus rather, can look at that as one shopping event. Instead of doing it, I'm going to apply with this person, 4 weeks later I'm going to apply with that person, and so on and so on and so on. You don't want to make it look as though you're a risk for all of a sudden going out there and pulling a ton of credit and adding more credit. It looks a little bit risky and probably not going to be good for your credit overall.
Oftentimes on that note, I hear buyers that are shopping around, talking to different mortgage officers, and I hear the other loan officers come in and tell them, oh, don't worry, I'm just going to do a soft credit pull. Can you just describe the difference between a soft credit pull and a hard pull?
Yeah, so a soft credit pull is usually done for consumer credit, things like credit cards, smaller debts, small loans usually. But when we're talking about a mortgage pull, you're generally going to see a hard pull. I mean, we're talking about a debt or a liability that's going to be possibly $200,000, $300,000, $400,000. So these are credit pulls that are much more in depth. They're looking at history that goes back a long time. So these are going to be credit pulls that do definitely affect your credit temporarily. But at the end of the day, it is just a shopping event. A lot of people worry about, how this is going to affect my credit. You'll see your credit dip temporarily, but as long as you're doing things right and shopping together in a certain time frame, you'll see it come right back up over a short period of time.
Awesome. Okay. Number 3.
Number 3, and the most important, if there's anything that's going to affect your payment or your credit score, it's going to be 30-day late payments. 30-day late payments are awful. I was telling you earlier, I got a suit for my brother's wedding a while back, and I went to a local tuxedo store and I purchased something, and then I just got busy. I didn't put it on auto pay. I totally forgot. I got a 30-day late payment for that company. It's totally my fault. But it could have been easily avoided. I'd been looking at my credit score on Credit Karma. Consumer credit showed that I was at about 790. And then I got interested in purchasing a house. I pulled my mortgage credit score. I was at a 690, 100-point difference between my consumer credit and my mortgage credit score because they're looking really in depth into my credit. They saw the 30-day late payment. And so I was a little bit devastated. And so I just want everyone to know that If you are struggling with keeping up with your payments, put everything on auto pay. Make sure that things are getting paid on time. And if you happen to miss or things are getting tight and you have to make a late payment, just don't let it be 30 days late. It could be 5 days late. It can be 15 days late. Just don't hit that 30-day mark because you don't want them to send that payment to collections. It's going to really hurt your credit score.
All right, I got a wedding coming up later this summer, so note to self, I'm gonna pay that tuxedo in
auto pay,
man, or auto pay at a minimum. All right, cool. Well, thank you everybody for joining us today. If you are on the fence, or if you're just thinking about one day buying a home, I highly recommend you reach out to myself, and I'll likely just redirect you over to Alejandro. Anyway, you can see that he's a great resource. He's been in this business for a while, and he's got a big heart to actually help and serve people and to help guide you and prepare you to buy a home. There's so many things to think about. There's credit. All the different types of finances and people that go on loans, and he's going to sit down and work with you to help find a plan and a mortgage that's best for you, and really kind of customize the program. So Alejandro Juarez,
thank you all so much. Again, I really would love to talk to you. If you have questions, make sure that you make time to plan out the purchase. You don't want to just one day jump in and decide that it's time. Let's sit down and talk about your options and figure out what the path to purchasing should be for you.
All right. Thanks for joining us today. We'll talk to you soon.
Bye.